What's going on, everyone? This is Stephen Place, the lead analyst over at Insiders Exposed. And today I want to come in and talk a little bit about the market correction that's currently going on, as well as a very actionable stock that I think is at a very good buy point right now. So we had some news, and I'm going to try not hit any keywords so YouTube doesn't yell at me. We had some news on Black Friday last week that a certain biological risk mutated a little bit, and that is causing governments to shut down travel and do lockdowns and all that other stuff. So that was a reason that was happening. The sell-off was happening, but we were a little bit overbought. We were due for a pullback. Markets inhale, markets exhale, and everything like that. Then yesterday, we see an acceleration of the news, not necessarily with the biological risk, but with central bank risk. When Jerome Powell comes out and says, hey, maybe inflation's not transitory. And that led to a further sell-off. So what I'm trying to say here is that, first off, don't panic. Second off, you should start looking at buy opportunities in stocks as we get a little bit more oversold. You're going to have some very good low risk, high reward opportunities out there. Third, if you've been invested in this market outside of large cap tech, it's been a tough kind of trade, right? So let's hop over to some charts. And this is a good example, right? This is a chart of the S&P 500, and we're looking at the SPY. So those are the spiders. And so far, the pullback has been fairly orderly, right? We had this very strong rally off of these highs. We had prior resistance right here. We've got the anchored VWAP coming into play. And this is a reasonable level to expect some pullback, right? And we're just 4% off all-time highs. This is not a bloodbath right now. I don't think it will become a bloodbath because a lot of people on the option side are getting a little bit overhedged right now, but there's always that possibility. So that is an orderly pullback, and that looks fine. The problem is about 35 to 40% of the total weighting in the S&P has to do with Apple, Google, Tesla, Facebook, Microsoft. Those names are, because they're so large, it's causing them to hold the indexes up very well, okay? What we've seen before, and this has happened over the past decade, this is not new, where some of these super high quality names, especially Apple, effectively become a place to park capital during corrections. And it seems so counterintuitive. Eventually you'll see rug pulls in it, but that is one of the reasons why Apple is holding up so well in this market overall, because it's super liquid. If you have a fund mandate to be invested in 80% of your fund in equities or something like that, you can get your money in and out of Apple because it is super liquid, and it's probably not going anywhere for a while. So that's one of the reasons the S&P's held up so well, right? If you've been invested in other tech momentum names, that's been the bloodbath. So we can also look at the Russell 2000 index. All right, so this is small caps. You're not going to have one name that's really driving the ship here. And this is about as textbook of a failed breakout as you can get, right? You see this nice rally, and we hold up for a little bit. We come back and we retest this level. There's also some other, trend lines and things coming into play right here. And so far that looked fine. And then we get the news on Friday, and you see this nasty gap down. You see inflation risks come into play and things like that on Tuesday. And then you see a secondary push to the downside. All right, so you're going to have a lot of trapped buyers coming in, and they probably have to work out of that. Now, that being said, we are coming into some potential support levels, so we'll see about that. I just put on some bullish exposure in the Russell yesterday, so we'll see how that goes. So one of the things that you absolutely want to watch are individual sectors during these sell-offs to identify when we start to see relative strength. And one of the areas that I'm watching right now, and this is where we get into our actionable information, this is going to be XBI, okay? And this is a biotech ETF, and it's not large cap biotech like Pfizer or anything like that. It's more diversified and distributed across a lot of other places. Now, since February, all right, so we did see a very nice run in a lot of biotech names back in February, March 2021. Since then, it's just been kind of a just vanilla bear market, right? We've seen a hard correction. It's gone sideways. And we have the potential right here for an exhaustion move to the downside, okay, where we have this support right here, this support right here, this little bit of support right here, and then we crack underneath it, but we're failing to see follow through. In fact, on Tuesday's trade, we saw an auction lower. The auction failed. We finished at the highs of the day while the market's hitting the lows of the day. So I think there's something there with once you start identifying that relative strength, even though it's a single day, that's going to be a bit of a signal, okay? And you might start seeing some of these names perk up. So inside of Insiders Exposed, we have a company that is just on the verge of a turnaround right now. And it's a very good story because, the stock had struggled for about a year. An activist fund came into play. They added 2 new board seats, and then they found a new CEO for the company. Okay, now, as soon as they found that CEO and installed him, many of the insiders started buying in size. So right here, you can see when the CEO was installed, you had the activist board members start buying stock in size. Other directors started buying the stock in size. And it was a non-negligible amount of volume. It's some pretty serious size right here. Now, the stock has not traded very well, and it's not necessarily anything wrong with the company. It's just broad sector risk, right? Especially with biotech stocks. If it's not a good environment for them, you're not going to see a lot of capital flow. But yesterday's trade changed that a little bit. Okay, so this is what the chart looks like right now. Again, just kind of a vanilla bear market, but the fact that we saw these insiders buying in size means most likely that they know something is up. And we can't tell. We don't know what they know, but this is why we follow these insiders, because they are the best traders of their stock. They're the best investors and timers of their stock, because while we don't know what the catalysts and narrative changes are, they do. And this particular company has a lot of products in the pipeline, in their development pipeline. And if any of those start to shift and we start to see changes in the narrative with FDA approvals or things like that, that's when you get the upside catalyst. The stock's trading sub $2 right now. It's traded up to $6, back in the bull market in Jan-Feb 2021. So any attempt to come back into those levels, it's an easy double, and it potentially could be an easy triple or more. So that's just going to be any changes in the perceived reward in the stock with respect to any changes in the news. You should start seeing it. So this is a very actionable trade right now. And it was a name that we just wrote up in our bonus report for Insiders Exposed members. So to get access to that bonus report and to see how we approach the market with our insider trading method, there is a link below this video that will take you to a special training that we just recorded the other day, and I highly encourage you to watch it. You'll get trained up. You'll see how we approach it, the 5 main setups that we look for, as well as more details on this particular trade and how you can get your hands on this bonus report. That's all I got for now. Go watch the video below this video. Have a great day.